Silver has been mentioned as a strategic metal by Russia. It's been mentioned as a strategic reserve by the United States. India, just recently, we found out that they've doubled their imports of silver, not in dollar or rupee terms, but in physical ounce terms. So the supply-demand situation on silver is very tight. If we were a week or two into November, I would say that's the reason, but I think this is too early. And my thought process, frankly, coming up to this number that we're at now, very close to 50, my thought process was wondering, will we have a failure to deliver and that blows silver through 50 and wipes the system out?
Something extraordinary is unfolding in the precious metals world, and Bill Holter says time is running out. Gold has exploded past $4,000 an ounce, silver is pressing above $50, and vaults in London and India are reportedly running dry. Russia has labeled silver a strategic metal. The U.S. added it to its critical minerals list, and India just doubled its imports in physical ounces. Holter warns that a failure to deliver could ignite a 72-hour chain reaction that takes the entire financial system down. If you own silver, your countdown has already begun.
We should have already had some sort of correction because gold and silver have been in the overbought area for quite a while. It would be logical that gold would stop at a round number of 4,000. It would be logical that silver would be stopped at the $50 number, which was hit in 1980, again in 2011. And of course, the alternative is that gold and silver just blow through those numbers. First off, I think it's important to understand that it's not just monetary and fiscal policy that has lit the fire under the metals. You go back to October of 2022 when the 300 billion of Russian reserves were confiscated. The following day is when gold started moving. I think we were, 1670 to 1700 at that point, and it's gold has really been a tractor in first gear. We've not had anything more than a 10% correction during that entire time since late 2022. Silver has been mentioned as a strategic metal by Russia. It's been mentioned as a strategic reserve by the United States. India, just recently, we found out that they've doubled their imports of silver, not in dollar or rupee terms, but in physical ounce terms. So the supply-demand situation on silver is very tight. And I don't know if this is because of year-end, but there's reports of a lot of mints around the world are out of silver. They're not releasing silver. Now, I don't know if that's because we're in the final quarter of the year and they're not making any more 2025s. If we were a week or two into November, I would say that's the reason, but I think this is too early. And my thought process, frankly, coming up to this number that we're at now, very close to 50, my thought process was wondering, will we have a failure to deliver and that blows silver through 50 and wipes the system out? Or do we get through 50 and then all of a sudden the amount of blood in the water, the sharks go crazy and blow it through 50 and create a failure to deliver? I don't know which comes first, the chicken or the egg, but I've been on the record for quite a while, close to 10 years now, that there'd be ultimately the finale would include a failure to deliver of both gold and silver. And it's always been my thought process, because it's such a small market, that silver would be the one to go first. So I don't know. We're in uncharted territory here. Gold is a thermometer, barometer, whatever you want to call it. And that is the reason for the last 50 years, gold and silver have had their prices suppressed. And actually, it's 49 years since 1976 when the COMEX futures and options were created. And I mean, there's all kinds of evidence showing that naked contracts have been sold in mass to try to suppress the price. So yeah, it's definitely a thermometer. I think you have to walk away from you look at the price of gold and you walk away from it thinking, well, something's really not right. Something's not right in the monetary system. Something's not right from a fiscal standpoint. And certainly things are not right from a geopolitical standpoint. I think it's really important to understand that if and when silver or gold fails to deliver, that will take the entire system down within 72 hours. This is not playtime anymore, where we are at the end of an empire. And I mean, the question is, where does the failure start? And I mean, it can start from anywhere. I mean, we could have World War III tomorrow morning. You could have banks going under. You could have derivatives blowing up. I mean, there's so many different potentials to blow this thing up. And I think if you're looking at it from the standpoint of we've got a year, 3 years, 5 years, I don't think that's even possible at this point. This thing is going to come to a head. And I mean, everything that the BRICS has been doing, that tells you right there that the world is moving away from the dollar system. And the dollar system is a Ponzi scheme.
Across global markets, the signs are flashing red. Gold's breakout above $4,000 isn't just another rally. It's a vote of no confidence in paper money. Silver's surge past $50 is even more alarming. Futures markets are now in backwardation, meaning spot prices exceed future contracts, a signal that physical demand is overwhelming paper supply. In India, bullion dealers have halted new silver orders. The metal simply isn't available. Analysts from HSBC and UBS have raised their forecasts to the $52 to $55 range for 2025, while U.S. Mint reports show retail coin demand surging again. Bill Holter believes these headlines aren't coincidences. They're warnings. He explains that since Western nations froze $300 billion of Russia's reserves in 2022, trust in the global financial system has been eroding. That confiscation triggered the first leg of gold's historic rise, and now silver is following. Both metals, he says, are the thermometers of truth, and their readings show the patient is dying. For nearly 5 decades, the COMEX and LBMA have used paper contracts to suppress real prices. But that leverage system is fragile, built entirely on confidence that delivery will always be possible. Holter has spent 10 years warning that one day a major exchange will fail to deliver. And when that day comes, the entire derivatives chain will implode. He estimates that once the first failure hits, the global system has 72 hours before credit seizes completely. Why 72 hours? Because every transaction, from shipping fuel to stocking grocery shelves, depends on short-term credit. When confidence collapses, credit stops, and the real economy freezes. If people can't eat for 3 days, Holter says, you'll have anarchy. The world runs on trust, not cash, and that trust is cracking. Meanwhile, the BRICS bloc is accelerating its exit from the dollar system. China is offering to store foreign gold at the Shanghai Gold Exchange. Saudi Arabia and Russia are trading energy for bullion. These shifts suggest a new, resource-backed order is already forming. Holter warns that when the light switch flips, when gold or silver can't be delivered, the dollar's Ponzi structure will collapse, forcing the Federal Reserve to become the buyer of last resort for U.S. debt. He calls this the end of empire, not decades away, but imminent. Holter's direct message to investors is brutally clear. Stop thinking in paper terms. Futures ETFs or allocated accounts may vanish overnight if the system fails. Only physical ownership, in your hand or direct custody, will matter when the curtain falls.
We're in the process. We've been in the process for a few years now. When the light switch goes off, that's when you get to that 72-hour window. And I firmly believe that light switch is a failure to deliver. Because the failure to deliver tells you that those contracts are worth zero. And that will take the derivatives chain down. And it will also destroy confidence in U.S. Treasuries. How's the U.S. Treasury going to borrow? Their only buyer will be the Federal Reserve. Well, you're already seeing that massive wall of debt come due. I mean, look at the subprime. Look at subprime. Look at commercial real estate. Look at auto loans. Matter of fact, I was watching baseball last night, and I hadn't seen an ad like this in years, but they ran 4 or 5 times. They ran an ad. Are you behind on your mortgage? If you're behind on your mortgage, call us. We'll help you restructure it, blah, blah, blah. I haven't seen one of those ads in years and years. Look at the traffic flow going through Las Vegas. Everything is shrinking. And what that tells me is we have 2 economies. We have the financial economy and the real economy, Main Street. And money is getting scarce on Main Street. And we've seen this. I've seen this. Precious metals dealers have seen this. There's been massive selling for the last 9 months in North America. And I pretty much ask every client, why they're selling. And 90+% is because I need the money. Yeah, if they fail to deliver, then what is the value of a contract that can't perform? And the answer is 0. And if you zero out a part of the derivative chain, now you have humongous winners and humongous losers. The problem is, if the losers can't pay the winners, then the winners become losers. And think about it from this standpoint. The world runs on credit, and credit is only forthcoming if there's confidence. If confidence breaks, if confidence is gone, and credit stops, nothing in the real world will continue to work. You won't have shipping, you won't have distribution, you won't have production, you won't have anything. And as far as my 72-hour comment is concerned, how long can a person go where every morning you wake up, you're only 72 hours away from anarchy? And I say that because if people don't eat for 3 days, you're going to have anarchy. And if credit breaks, you're not going to get a loaf of bread to the store. You're not going to get tomatoes or beef or anything else to the store. And I've said this for years. The world runs 100% on credit. There's virtually no cash and carry. Think about it. Think about your Walmart. Think about your grocery store. They work on 30, 60, 90-day credit. Think about builders. Think about your trucker. How's he going to get fuel if the gas station and the fuel industry lose credit? Then the fuel's not running. If the trucker doesn't have credit, he can't fill up his truck. Nothing moves. Everything will grind to a halt when credit stops.
Bill Holter isn't predicting a market dip. He's describing the endgame of a credit system built on illusion. Gold and silver are not just investments. They're the final warning lights before the reset. Every ounce you hold outside the system is a lifeline when paper promises burn. So here's the question for you. Do you think the collapse begins with silver's failure to deliver, or will the bond market crack first? Share your view in the comments. I read everyone. If this video helped you understand what's really happening behind the headlines, hit like, subscribe, and tap the bell so you're ready before the 72-hour countdown begins. Because by the time the system admits the truth, it'll already be too late.